Earnings season, I wanted to do a quick recap of Facebook since it's trading so aggressively in the aftermarket. My goodness, Facebook up over 20%. I'm going to share my screen. Past performance is not indicative of future return. I mean, we got a couple of real movers here in the aftermarket. But it's really fascinating to me because this is probably one of the worst quarters that I've seen yet. And yet it is trading up so aggressively, which just tells you that the market will do whatever it's going to do. Now, I told you guys the other day that if I had to pick a direction, I would have picked the opposite direction than this, but that I wasn't picking any direction because I was extremely worried that the market might overreact to an estimate that was too low. And in a lot of ways, I think that's what happened. If you look at this up almost 20% in the aftermarket, and then you review what actually happened, it's kind of like, what was that all about? Let me show you real quick. Here is the slides, some things that I pulled out from various parts of their quarter, but it was just not a good quarter. Top line revenue growth, quote unquote, beat estimates was down 4%. And then EPS beat estimates, but was down 50%. And when you go through it, it's not like there was anything in the quarter that was truly good, for lack of a better way to describe it. It was just, in theory, everybody else was, or the street was thinking it was going to be even worse. Now, you might be like, but May, that should mean that it's a great situation. And I'm like, no, because they also guided in the worst possible way. They guided that they were going to have a problem, not easily, I mean, easily for all of 2023, but potentially into 2024. And some of the things that they actually said, if it was anyone other than this like halo for some reason that they have, they would have gotten clobbered for saying those words. Instead, this bad boy stuck right at up 20%. Now, here, let me go through this a little bit further. So this was the top numbers that came out, but this was also excruciatingly sequentially painful. So here is the different parts in the way that they describe their business. There's advertising revenue. That was down, okay? That was up, but that's very random. Then they have this family of apps revenue concept, which is basically them using data from one to get data from the other and then pushing it out to you via ad revenue, also down. And then Reality Labs, which by the way is where all the money's going for Capex, that's Oculus and all that stuff, that was down a lot. And that was despite how much money and effort that they've put into it. And then when you get to operating income, you can see that the year over year, not only did they make less revenue, but it cost them more to make that revenue. That's what this 9 billion versus 13 billion is year over year. And then Reality Labs, they spent even more money to make even less money. So it was actually quite a bad quarter in that regard. Additionally, capital expenditures, this right here, what they said here, if it was any other company where people weren't just trying to say stuff and make, the street is so in love with Facebook right now. It's like not even funny, meta, whatever you want to call it. But this right here is the Capex, and you can see that it nearly doubled on the quarter. Wait, more than doubled on the quarter. And it's been a ridiculously big increase. And I had said in past episodes that my big bugbear with them is that they aren't really announcing a strategy that tells me that they have it under control. Like clearly the existing business model needs to go under a massive transition. And I didn't hear any articulation of the new strategy and what it was actually going to do. I heard a lot of like follow the leader, praying that it works. So for example, this Capex is both the Oculus stuff that didn't make any money that they're going to plow more money into. And it's also this belief that the Reels feature on Instagram is somehow going to drag them into the new millennium. And that's despite the fact that everybody knows that business is starting to really need to be transformed even at TikTok. So I just don't even understand how anyone, and then he's like asked point blank the question, hey, when is this Capex going to start like showing a return on capital, return on investment? And he's like, well, I don't think it's that straightforward. And, some of it will just make us a better business where people will want to stay and maybe we won't necessarily need more headcount or something like that. In other words, he's got no clue. He's got no clue. He knows he has to do this Capex and this is probably the right Capex, but how does it relate to actual dollars and cents to the investor going forward? No clue. No clue. I mean, now technically JP Morgan also answered this 2 quarters ago, but that's very different because JP Morgan has all this regulation they got to implement. So it doesn't matter one way or the other. Here, he's trying to do a business model transition. So this CapEx absolutely should relate to the new strategy and what it's going to financially make for him. And it just didn't. I mean, his answers on the call, y'all can listen to it and see what you think, but I definitely did not think that that was the appropriate answer. And I definitely think if anyone else, except for the street, who has basically somehow come in underneath his really bad quarter and is promoting the stock. I think if anyone else had said the words that he said, they wouldn't have gotten away with it. But he somehow magically has managed, again, the stock is trading up 20% in the aftermarket. It's amazing. It's amazing. And that's despite the fact that I like the guy. I really admire Mark Zuckerberg, but I don't get it. Sorry, guys. Now let's look at the spending breakout. This one, I also don't totally understand why the street is just giving him the hall pass of all hall passes, right? Okay, here's your revenue again, down whatever percent. And then here is cost of revenue. It's more or less the same, meaning he didn't get any costs out of just that portion of it. Research and development, he talked about the fact that he was dialing that down, and it is somewhat dialed down. I'll show you that graph in a second, but it's still up year over year dramatically. And on the one hand, I think that's kind of sucks. But on the other hand, I kind of get it, because if you told me just before that you have no idea when the CapEx will cease because you've got to reinvest in the business, it kind of makes sense to me that but it looks like desperation when I read these financials. I'm sorry, but that's how it looks. Marketing expense went up, and I'm going to show you why that's a little crazy as well on top of this. And then G&A is up a lot. And that's despite the fact that you've been laying off people left and right. So I just don't totally get it. So that is therefore what the income from operations is. It's about half what they did last year. Now, here's what I mean by that this marketing and sales number and this cost of revenue, how it hurts me a little bit. It's because this is the average revenue per user. And worldwide and the rest of the world, which is the smallest piece and is basically, Latin America and random countries in Asia that actually use Facebook, Instagram versus other things. And I mean, there's a lot of countries that use Instagram. Don't get me wrong. Y'all know I'm a traveler, so I'm big into Instagram everywhere I go. But you can see the revenue per user in those countries, and then you can just intuit from this that maybe it's the US and Canada that matter the most. But when you look at it, their ARPU, the revenue per user, is down 6%. And that is despite all of this effort on marketing and sales and an identical amount of cost of goods sold that was applied to it. That ain't great. I mean, there's no way to spin it. That's just not great. Sorry. I know somebody at Facebook is probably going to get kind of mad with me, but I got to tell it like it is. Here's the free cash flow. So sometimes when you do the numbers and you take out DNA and all that stuff, right, it somehow magically still looks good. It doesn't look good. Look at this. This is horrible. Okay. So sorry. Let me give you the red boxes to make it a little bit easier so you can see it better. Free cash flow is almost he basically took every bit of money. Okay, so some of you guys don't know this metric very well. Basically, you take operating cash flow and you add back in Capex, essentially. Okay, so basically every dollar that he made in operating cash flow, he put right back in to Capex. That's what that means. And why is he doing that? I told you why, because he doesn't have any kind of strategy in the go forward. So he's got to spend his way out of this current situation, which even if the economy picks up, apparently that wasn't, he's got to spend his way into a new strategy. That's what this is all about. Because here's the thing. Some of you guys might be like, well, GDP growth, it's bad all over the world and lotta, right? And that should have been what he spun this call to be. That is not what he spun this call to be. He spun this call about everything else that's supposed to go okay for him. There's some kind of click through on WhatsApp that's going to be so incredibly profitable, and reels and all this stuff. But I don't, you got to actually show me numbers on that. You can't just say that on a call like that's the most important thing. We have to know the magnitude of how that's going to transition. And when asked, like, when you going to see this turn, he was really talking about a 2024 situation, not a 2023 situation, which means these estimates, everybody's okay. Like, here's the thing. Some people are like, well, don't you think Meta is cheap? Okay, let me show you. And these are approximately right for the last quarter, but the data feeds usually need 2 days sometimes to fix it. Let me show you what the multiples are, because I was trying to do this a little too quick, so I didn't get a chance to do the multiples myself. Now, on a free cash flow basis, we know he didn't make no free cash flow, right? He's like 173 off of this ridiculous market cap. So we know that number is going to look ugly. So I can't do a price to free cash flow. And I also, by virtue of that, probably should do a price to EBITDA, but it would be 9 billion off of this big, huge number. 9 billion times 4. Well, you got to kind of annualize that. We'll take a look at it in just a second. But you got currently, with this new 20% up, you got to multiply 386 by 20%. They do have cash, so I'll give them that. Balance sheet is looking good, but it was trading at 18 times before, which, by the way, is much higher than, I think Google's at like 13, 14 now, and Microsoft is lower than that. So it's trading at a higher multiple, but it actually didn't make as much money this quarter versus last year. So when you annualize out what the anticipated returns are this year, you're going to get a lower earnings number if you're doing the 1 year forward PE. Now, some people be like, you shouldn't do a 1 year forward PE. You should annualize it out and do this like really fancy discounted cash flow. And you know what I'd say to that? How are you going to do a discounted cash flow when he hasn't told you what any of these new strategies are actually going to make in the future? Plus, even if he told you, you'd still have to figure out if that was true or not, because it's not really announced. Do you know what I mean? So there is no discounted cash flow way of doing this that's going to make you. Anyways, you got me. Hopefully that made sense. If not, obviously stick it in the comments and I'll try to address it more clearly. But this is a bad quarter. What else we got? Segment results already went through. Oh yeah. So these are my major issues. No real roadmap on how long it will take. They're going to have declining revenue for a bit. Reels is what's core to growth, but we kind of know that that's already a problem for TikTok to some extent. It's not a big problem. And then there's some stuff on WhatsApp that they were trying to tell me, but they sure didn't tell me that there was going to be anything really exciting going on. And the guidance they gave, by the way, was down 7 to up 2%. I'm like, how am I supposed to give you a multiple that's higher than Microsoft and Google? Even though I'm sure Google might have special sauce to tell us this quarter, when that's your guidance for 2024, there's other companies that are going to do great in 2024. Yeah. Anyways, with that, I will go ahead and hit the pause button. I'm not getting a lot of questions because I know it's really late, and I so appreciate you guys tuning in to me despite that. I was on calls, but Snap scared me out of them. Oh, One Love. Yeah. I haven't looked. I'm assuming you're talking about the Snapchat's conference call. I haven't had a chance to listen to that. Technically, it's not in the S&P 500, but I'm curious too, because man, the reaction's not been great. Oh, I did not know that, Gil. That's a really interesting thing. I don't know I don't know. I mean, they own so much of everything, but that's intriguing. And that it would be weird for it to be the largest, since they literally could choose any of the large cap companies. Very, very interesting. All right. I think that's all the questions I have. I know it's been a really long day of earnings plus the Fed. I hope everybody makes lots of money tomorrow. Hey, if it's going to be up 20%, I wasn't in it for a reason, because I really thought people might do cray cray. As far as that goes on the quarter, I do think that this, like, if this gets too out of hand and I still have a little bit more work to do, I legit might have 1 or 2 puts on this at sometime in the near future. I'm just going to say, but I think everyone should be really careful in this market. It really has a strong bid as far as that goes. People, for whatever reason, truly want to buy this market. And I think if you see how poorly that Meta did, it kind of makes sense that you should be a little bit scared to be short this market. All right, guys, good luck.